The State of the Economy document tabled in Parliament by Finance Minister Nirmala Sitharaman Friday indicated that India's world beating growth is moderating and more needs to be done to achieve the near 8% annual rate needed to achieve the Viksit Bharat target by 2047. First is India's economic growth outlook. India's economy is expected to grow at a rate of 6.3 to 6.8% in the 2025-26 financial year, according to the government's pre-budget economic survey. However, experts suggest this is much lower than what is needed for India to achieve its goal of becoming a developed nation or Viksit Bharat by 2047. To reach this ambitious target, the country requires deregulation and major reforms in key areas such as land and labour. The report presented in Parliament by Finance Minister Nirmala Sitharaman highlighted that while India's economic growth remains strong, it is gradually slowing down. The projected growth for 2025-26 is slightly lower than the 6.4% growth expected in the current fiscal year and significantly below the 8.2% recorded in 2023-24. Next up is key growth drivers and risks. Chief Economic Advisor V. Anantha Nageswaran pointed out that factors such as a rebound in agriculture, easing food inflation, and a stable macroeconomic environment could drive growth in the near term. However, he also warned that geopolitical tensions, trade uncertainties, and commodity price shocks could pose challenges. Next is India's growth target and investment needs. To achieve long-term economic success, India must sustain an annual growth rate of nearly 8% for the next 2 decades. The survey stressed the need to increase the investment rate from 31% to 35% of GDP. The International Monetary Fund projects that India will become a $5 trillion economy by fiscal year 28 and reach a $6.3 trillion by fiscal year 30, with a nominal annual growth rate of 10.2% in US dollar terms. Next is the need for economic deregulation. The survey emphasized the importance of economic freedom and deregulation to unlock India's full potential. It called on states to reduce regulatory burdens, cut unnecessary tariffs, and relax business controls to encourage investment and innovation. The report also highlighted the importance of supporting India's small and medium enterprises known as the Mittelstand, which have been key drivers of economic growth in countries like Germany, Japan, and Singapore. It warned that over-regulation can stifle innovation and slow down economic progress. Next is inflation trends and retail prices. Food inflation is expected to ease between January and March as seasonal vegetable prices decline and new crop arrive in the market. Retail inflation is likely to gradually align with the Reserve Bank of India's target of 4%. However, the survey cautioned that this trend could be disrupted by bad weather or rising global commodity prices. In December 2024, India's retail inflation fell to 5.2%, a 4-month low. However, food inflation remained high at 8.39%, with vegetable prices surging by 26.56%. Next is India's financial sectors. Despite global economic uncertainties, India's financial sector remains resilient. Banking profitability has improved and the gap between credit and deposit growth is narrowing. The report also highlighted the crucial role of capital markets in driving economic growth. IPO listings have increased 6-fold between FY23 and FY24, fueled by growing participation from young investors. However, the survey warned that India's high stock market valuation could face risks, especially if the US markets experience a downturn. Next is trade and external sector performance. On the trade front, India's merchandise exports have shown moderate growth mainly due to slowing global demand. Meanwhile, strong domestic demand has pushed imports higher. The survey stressed the need for a strategic trade roadmap to navigate global trade challenges, including rising protectionism. Another point is concerns over long work hours. Amid ongoing debates about 70 to 90 hours work weeks, the economic survey warned against excessively long working hours. It cited studies showing that working over 60 hours a week can have severe health effects. Spending 12 or more hours a day at a desk was found to cause mental distress and reduce overall well being. The economic survey highlights both India's strong economic performance and the challenges ahead. While growth remains positive, the country must accelerate reforms, boost investments, and reduce regulatory burdens to achieve its goal of becoming a developed nation by 2047. Stay tuned to Orissapost Live to stay updated.